Hi, this is Pia. In this video, I'm going to discuss the SFP or the Statement of Financial Position in Accounting. First, what is SFP? According to bbc.co, the Statement of Financial Position shows the value of a business on a particular time. It is also known as the balance sheet. In other words, the Statement of Financial Position gives you the information on the business value on this particular time. Example of this is you want to know the business value on January 30, 2015. So, you have to make the Statement of Financial Position to know the business value on that particular time. The SFP has three major components. The first one is the asset, next is liability, and the last one is the equity. First, let's talk about asset. When we say asset, just remember one thing, the word own. An asset is something that an entity owns in order to run a business and to make something that is profitable out of it. In the SFP or the Statement of Financial Position, we will still apply the basic accounting equation, which is the assets is equal to liabilities plus equity. So an asset is divided into two. The first one is the current asset and the second one is the non-current asset. Current asset. These are all the assets of a business or a company or an entity that is expected to be sold or to be used within a year. So, the examples of current assets are cash, cash equivalents, accounts receivable, stock inventory, marketable securities, prepaid liabilities, and other liquid assets. So those are the examples of the current asset. Non-current asset or long-term asset. These are the long-term investments of a company. This may be used or this may be claimed within the next 5 years or more. This means that an asset that exists or exceeds a year will be classified as a long-term asset or non-current asset. So, example of a non-current asset is investment on other companies' intellectual property like patents and property, plant, and equipments. So those are the examples of a non-current asset. Now let's move on to the liabilities. When we say liabilities, we must also remember one word, and this is the word owes. When we say liabilities, this is something that a company owes to another entity. And then when we have a liability, a company is obliged to pay back or give back what they owe to the other entity, and it has to have a settlement or agreement on how you give back, and one of its settlements is maybe transferring cash or other resources. The same as the assets, the liabilities is also divided into two, and it is the current liabilities and non-current liabilities, which is also known as the long-term liability. Let's start with current liabilities. Current liabilities, these are the financial obligations that must be paid or that is due within a year. So, examples of current liabilities are accounts payable, short-term debt, dividends, notes payable, and as well as income taxes owed. So those are the examples of current liabilities. Next is the non-current liability or the long-term liability. This is obviously the opposite of the current liability. So that means that the non-current liability is a financial obligation of a company that is not due within a year. It usually depends on the settlement or the agreement. Maybe it will due the next 5 years or the next 6 years. So the examples of a non-current liability is debentures, long-term loans, bonds payable, deferred tax liabilities, long-term lease obligations, and pension benefit obligations. Usually, it is stated on the problems that when will the liability will be paid or will be give back. So it is still up to you to learn or to identify if it is a current liability or a non-current liability. The last major component on the SFP is the equity. So when we say equity, this is what the business owes to the owners of the companies. Now we have finished defining the three major components of the SFP. Now let's move on to the two forms in writing the statement of financial position. We have the account form and the report form. Now let's talk about the account form. The account form is a format in writing a statement of financial position where it is in a horizontal manner, wherein the assets are written on the left side and the liabilities and equity are reported on the right side. Next is the report form. The report form is still a format in writing a statement of financial position where it presents the asset, liability, and equity in a vertical manner. So this is the example in writing the statement of financial position in account form, where the assets are written on the left part and the liabilities and equity are written on the right part. While this is the example of writing the statement of financial position in report form, where the asset, liabilities, and equity are written in a vertical manner. Now, I'm giving a sample problem for a statement of financial position. Now, this is the answers on the sample problem earlier, and it is written in account form.